Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And this time around, we're taking a look at the good old Nasdaq futures. Now, the Nasdaq, along with most of the indices, in really all of the markets, had a very strong start to the day. Unfortunately, it didn't end up continuing, right? A lot of the markets we saw either took a big pause and they just didn't go anywhere for a good hour or two, or it fell apart on itself. A good example would be the bonds or the notes or the Ultra T bonds. They all completely reversed the big spike that they had started off in the morning. Now, in case of Nasdaq, we open up, first candle of the day is a doji. Nobody likes seeing that, right? Complete indecision after a gap higher above yesterday's high, also above last month's high. Little bit of confusion, something that we need to be paying attention to. You know, what do they want to do with this doji? Are they going to try to break out of it? Is the breakout consistent? Or are they going to try to break out and fail? There's a lot of different scenarios that can happen when you run into this type of doji start. Now, they followed up second candle of the day, very strong bull, and that adds a lot of sentiment to the buyers. They're showing that, you know, okay, the first move of the day, the first 5 minutes, relatively indecisive, but now we're starting to see the buyers really kick it up a notch, and they're actually even closing the candle on its high. Going into bar 3, now we have a little intra-candle pullback. If you go to a faster time frame, like a 1 minute, you would see a pullback here. They move up, they pull back, and the buyers bought into it aggressively. Nice continuation type pattern, and all of that can be seen in that wick right there. So it's pretty obvious that even though they started off the day relatively indecisive, they made up their mind pretty quickly after that, because then the next 15 minutes has been all bullish. And when the buyers tried, or the sellers rather, tried breaking down below a prior candle's low, the buyers snapped it right back up. So that's a big clue that the buyers are not only buying high, they're buying aggressively as soon as a candle opens, but they're also buying low. They're buying at the bottom of candles. They're buying attempted bear breakouts. You have every reason to be very aggressive in this type of environment looking for the upside. So buyers will buy into that attempted push down. It failed for the sellers. The buyers bought in. We have a counter attempted move, really bad follow through, and those are both good reasons to be a buyer. So you're buying into the sellers, assuming that the sell move down is likely just a small little pullback before another run to the upside. And we have a big bull breakout that really kind of sealed the deal on that one. Now, after all of that buying, this bull move really kind of ran out of steam. Big bull breakout. It did have nice follow through, but then it went into a doji, into weak bear. The bears tried engulfing the prior bear, and then they ran out of steam, right? So we're getting a lot of clues that, well, although we're pretty high, the sellers aren't showing a whole lot. They're not really proving anything. And when the buyers came right back in, they came in force. Big, massive bull candle closing on its highs, showing the strength is right back in the market again. And all this happened to be was a buying pullback. Now, with that aggression to the upside, that shows that the buyers have another shot at taking it higher, which really just opens up another good buying move right back up to the highs. But then we start running into a little bit of an issue, right? Now we've had really strong bullish momentum to the upside, big strong push, another follow-through move, and then another follow-through move. Now this is where things get a little bit interesting, because generally speaking, we're looking at the buyers buying for pretty much any reason, right? The buyers are buying everything they can get their hands on. Even right here, you could argue that there were buyers there that tried to shove the market up. The one thing that stands out here is simply the fact that once they got another breakout move, like we've seen several times before, this one completely fell back in on itself, right? All of the other ones, they cleared the prior highs. They showed good bullish strength. We saw a bunch of gapping to the upside. Everything was showing good movement. And then this happens, right? Now, it doesn't necessarily mean the buyers are done, but it's pretty apparent that the buyers no longer want to buy way up here. So what are you looking for? Well, there will be sellers that sell that. It's very aggressive, but waiting to see what does the market want to do? Do they want to pull back a little further, maybe test the moving average, maybe come back and trap a low, get a stop run, something, right? We get a big bear move, and then notice the consecutive bearish nature here. This is a lot of bear pressure. Strong bear bar, another one closing on its lows, another closing near its lows, big, and another one closing one tick off of its low and fairly big. That's a lot of bearish pressure. Now, the overall bullish momentum is still up, and there will probably be buyers off the moving average and off of gap fills and, all of that fun stuff, but there's a little bit of a problem here. There's too much bearish pressure. So buying into this move is going to be considered aggressive. It's lower probability until these sellers kind of get it out of their system. We have a small buy move up off of the moving average, an engulfing bull, bad follow through. They try to get it going again, bad follow through. One last shot, very reminiscent of what happened here. Big push up, immediately shoved back down, and then the buyers completely dissipate, and then we start running into trouble, and it slams back to the downside. So definite little kind of shift in sentiment here. Beautiful movement to the upside, and then once you finally put a top in, we have a twin reversal top into heavy bearish pressure down and lackluster movement off the moving average. Something is obviously wrong. Paying attention to those key elements of, wait a minute, that shouldn't have happened. When you find yourself saying that, you are reading the psychology of the market. You're putting an understanding on, well, if that shouldn't happen, what is that telling you? What should have happened was a high probability scenario, and it didn't. And if a high probability scenario doesn't occur, the low probability is the other one. And if a low probability scenario occurs, you're expecting extensive movement because it's surprising people, right? It's taking a lot of people by surprise. So nice bearish correction down if you were able to trade into the afternoon session. But overall, just a phenomenal day of price action as well as market psychology. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it useful, maybe a little bit entertaining. And we'll see you next time.